Hey everyone, in this video I'm going to highlight some great news for Disney stock investors who I'm sure could use some good news. The stock price is down significantly on the year, trading near 52-week lows as of this recording, and so some good news would be a nice boost to Disney stock investors. So let's jump right in. And the good news is surrounding Disney's theme park segment, which also includes its cruise ships. So let's start there. Current fourth quarter booked occupancy for its existing cruise ship fleet of 5 ships is at 98%. And they'll be adding to their fleet 2 more ships in 2025 and another in 2026, nearly doubling their worldwide capacity. So this part of its business is booming. And remember, during the pandemic, the cruise ships were the first ones, arguably near one of the first businesses to get shut down and one of the last businesses to be allowed to reopen and get going again. So if there's pent up demand for any part of the worldwide economy, it's in this segment. And so this is a good area for Disney to be expanding capacity in, especially when they consider that they're 98% booked. And remember, there's been significant price increases in the cruise ship industry overall. So this is 98% booked at higher prices. So that's definitely going to help the company's profitability. Moving on, Disney's Shanghai Resort and Hong Kong Disneyland have experienced stronger than expected recoveries from the pandemic. Remember, the economy in China was the last to reopen completely, and so there's still going to be a lot of pent up demand coming out of people in that region going to some of Disney's theme parks in that area. So that part of its business should drive some growth for the theme park segment in terms of revenue and profitability. That said, there was some softer performance in Walt Disney World, and that's most likely because of the tougher comparison from last year when they were coming off their 50th year anniversary celebration. And so that combined with the pent up demand leveling off in Florida, because Florida, remember, reopened. It was one of the first states in the country, in the US, to reopen, allow Disney's parks in that area to reopen before Disney's parks in California were even allowed to reopen. So that part of Disney's theme park segment got going sooner. And so the pent up demand is leveling off over there first. And so that's understandable. Still, if you consider, Walt Disney World is well above pre-COVID levels. 21% higher revenue and 29% higher operating income compared to fiscal 2019, right? Those are significant improvements for a part of Disney's business that's a meaningful contributor to its revenue, its profit, and its cash flow. So it's definitely great news for Disney stock investors that this part of Disney's business is thriving and growing and doing very well because, as has been well advertised, Disney's cable business, due to cutting cord phenomenon from customers, is not doing so well. So the good news is this part of its business can help sustain the company, generate revenue, generate profit, generate cash flow while it transitions to the streaming world. All right, but that's all for this video. Some good news for Disney stock investors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.